All right, Courtney, thank you so much. And thank you, Gavriel, for being here. So the big news is that you bumped up to a 51% premium to the unaffected stock price from a few months ago, but shares still trading about $3.50 below that price tag. You said in an earlier release that the board was unwilling to engage due to a lack of confidence surrounding financing as well as the purchase price. And I'm wondering if you believe that this newest offer, as well as any developments on financing, have closed the gap there.
Yeah, so firstly, thank you so much for having me. Leslie, Courtney, good to see you both. The company said that they were unwilling to engage with us on financing. I don't know if that's the real reason or not. We can only guess as to the specific reasons that they weren't engaging. In fact, in previous conversations with them with respect to financing, they made it very clear to us that they didn't have any additional questions on our financing. And we hope that the additional information that we've given them, notwithstanding their lack of specific requests, has put to the side any questions now. But to the extent they have any additional questions, we urge them, as we have previously, to please let us know specifically what they would like for us to address. With respect to price, as we stated then when we initially made the offer, we had a high degree of confidence and optimism that we could increase our offer if we were granted access to confirmatory diligence. The company was unwilling to provide us with access to said diligence, but they did release Q4 earnings, and that gave us more information, allowing us to drop some of our conservative assumptions in our underwriting and in turn increase our price to now $24 in cash.
Macys, for its part, said in a statement that it does not intend to comment further on the Arkhouse and Brigade's revised unsolicited non-binding proposal until the board has completed its review. But kind of going into the financing, you say that Fortress and 1IM have joined as equity capital partners for 50% of the financing. You say you have that, but what about the rest in terms of presumably debt financing that you'll need to get to this purchase price? And how does the $24 a share change the dynamic as it pertains to this financing?
Yeah, so the debt for this transaction is at a relatively low conservative level of 50%. I think for historic comparable transactions, that is much less financing than typical. And we're pleased that we can, kind of give that certainty to shareholders. The debt is coming from money center banks, a number of whom have expressed very strong interest in getting diligence alongside us and moving towards firm commitments and closing with us. With respect to how 24 changes that financing, as mentioned, our ability to come up in our offer was really driven by us being able to shed some of our very conservative assumptions in our underwriting.
Gavriel, obviously you mentioned that we now know a little bit more about Macy's financial position, given that they did just put out their earnings. But I know a lot of part of the value that you've seen in the retailer when we've spoken previously does have to do with the real estate. As part of the announcement and the strategy under new CEO Tony Spring going forward, they do intend to close about 150 of their stores. That's about 30% of their fleet. So how does that change, if at all, your thesis about the value of the real estate?
Well, hopefully not at all. Hopefully we get to, close on this transaction and to give shareholders that premium long before, the company under its existing leadership moves to close stores. Our plan is not conditioned on store closures. It is not a part fundamentally of our business plan at all. In fact, we think the real estate is so valuable in large part because it's occupied by Macy's.
So then I guess another question, too, is do you really want to run Macy's? If you were successful, would you continue to run it as a retailer, or would you just try to sell off that real estate and get the value therein?
So very much we want to continue running the company. And again, the value of the real estate is really fundamentally driven by its great tenants, which we think can be that much more creditworthy under new leadership. So the two are sort of fundamentally enmeshed with each other. There is a very commensalistic relationship between the real estate and the retailer that sits in it. And we think the real estate can become that much more valuable by putting on these, necessary changes on an operational level post privatization in the private markets, as compared to trying to execute on really fundamental business changes in the public markets, where it's much more difficult to.
And Gavriel, it's Dom. I wonder just if you could take us through what you think Macy's / Bloomingdale / the entire portfolio looks like operationally after you've hypothetically done this deal 3 to 5 years from now.
Hopefully a whole heck of a lot stronger. Our again, sincere hope is that this is not a sort of going concern for shareholders, but very much Macy's is a, stable and growing company that can live for decades and, potentially another 150 years. So we think that needs to happen, behind the curtain, away from the public markets. We think that current management has really been largely solving for the quarter. And when you're so focused on sort of that near-term execution, it's really almost impossible to ensure your long-term viability.
Gavriel Kahane, Leslie Picker, thank you both very much for joining us. I'm sure we will be covering this more as things get underway further. Thank you.